Today, I want to talk about a really important subject, and that is the way that fees are charged to clients by advisors. Okay? I'm a financial advisor. I charge fees to clients, or I get paid, but yet, how do I get paid? Okay? It's important to know this, important to understand this, because I think having knowledge of fees that you're paying an advisor or paying anybody you're working with for that matter, I think that tells a lot about the relationship, and it's going to help you determine who the right person is for you. Now, there's more to that. You obviously want to get along with that person, like the advisor, um, know that they have some sort, at least a certain level of competence to be able to help you out with your situation. But let's talk about fees, okay? I did a video previously that talked about different types of advisors and the different ways they are paid, okay? A lot of advisors are paid on commissions from selling certain products. It may be all commissions, it may be part commissions, but today what I'm going to talk about is basically the not flat, is the fee only advisor, okay? So when you pay an advisor, and there's a lot of hybrid type advisors that will charge AUM fees as well. But in general, if you're paying fees to an advisor versus commissions, I'm not talking commissions at all. If you're paying fees to an advisor, this is the way, one of these ways is how you're going to do that. Okay? So let's dive in. The first one I've got up here is a project basis. So you pay an advisor a fee on a project basis. And this is I'm going to say that this is mainly for do-it-yourself investors. So if you're a do-it-yourself investor and you want to continue to do that, yet you have you have some questions. Think, well, maybe I'm not doing everything right. Maybe there's something I'm missing. I think I'm doing it right, but yet, and then there's something you're not very good at. Maybe you're not very good at tax planning. You don't know tax law very well. So you can go to an advisor like this. You can go to typically it's going to be a fee only advisor, and you can pay them a fee for a project or for doing a plan for you. And that's going to be a one-time fee. I've seen fees anywhere from $300 to do a very limited engagement to I've seen people that charge, I know people that charge $8,000 to do a financial plan. Okay, now there's some people that will charge $1,500, $2,000, $3,000 to do a financial plan. But regardless of how much you are paying that person, you know exactly what you're paying them. You know what you're paying them for. You're paying them to give you advice, to do a plan, and then it's up to you to go and put that plan into place and to monitor it. All right? So that's number one. But what I really want to focus on here is these three. Okay, these are the three ways of paying an advisor ongoing. So there's only so many do-it-yourself investors and people that can do a really good job of it on their own. And I don't disagree that that can be done. In today's world of technology, the internet, we can figure about anything out online. But the question is, are you going to be able to do that as well as somebody that does it every day, as a professional that does it? So, three ways of charging ongoing fees. I'm going to start with the most common here, and that's called AUM, or Assets Under Management. All right? And the way that this advisor charges is you give that advisor, the advisor doesn't make anything, typically, until you move money to that advisor. Okay? I move $500,000 out of my retirement plan to this advisor. This advisor is now managing it, and now that advisor is going to charge me an asset under management fee. Okay? Assets under management. And assets under management fees can be anywhere from 2%. Every once in a while I've seen something over 2%, but we'll call it 2% down to typically 1%. Some advisors may charge less if you have a couple $1,000,000 with them. It all depends on the advisor. Okay, somebody I just worked with this week, they have something like $300,000 or $400,000 in assets. They're paying a 1.4% asset management fee. Okay, and then in $1 million, theirs goes down to 1%. So, in other words, that advisor has a direct conflict of interest if you have money somewhere else. Okay, let's say you have money in TSP, and that money should stay there in TSP for whatever reason. But it's best for you to leave that money in TSP. Well, that advisor doesn't get paid on those assets. Okay? But if the advisor moves the money out of TSP into an IRA that they can manage, then the advisor gets paid whatever that asset management fee is. All right? So there's a direct conflict of interest in that. Now, and I'm not saying this is bad. I'm not saying AUM advisors are bad. I'm just trying to educate you on how these fees work. Okay? Now, another issue with AUM fees is if you have, let's say you're paying, let's just keep it simple and say you're paying a 1% asset management fee. I'm the advisor. I'm managing money for somebody that has $500,000 and somebody that has $1.5 million. The $500,000 is in one account in an IRA. The $1.5 million is in one account in an IRA. Okay? Well, the person with $500,000 is paying a fee of $5,000. The person with $1.5 million is paying a fee of $15,000. Okay? So the question is, am I, as an advisor, doing 3 times the work for the client with $1.5 million? And I would argue that most of the time the answer is no. Okay, asset size is not it's not a definite indication of how much work or how complex somebody's situation is. Okay, so it's just another issue with AUM fees. Okay. Now, one good thing about AUM fees is as your assets grow, then the advisor's pay grows as well. Okay, and we all know advisors don't want to make less money. Nobody wants to make less money, right? Therefore, the advisor does have an incentive to see your accounts grow because the advisor will be paid more money. Okay, now, net worth fees. And again, fees here, they range from all over the place. I heard one advisor recently who has clients with $2, $3, $4 million, and he's charging them 1%. And over the next year, he plans to increase fees for all clients, regardless of asset size, up to 1.5%. So that with that advisor, if you have $2 million, you're currently paying $20,000. Now he's going to increase the fees. Now you're going to pay $30,000 a year. I would think that would sting a little bit. So net worth and assets. Okay, this is another. There's a small group of advisors. And I say small, all groups are small compared to AUM, okay? That's the predominant way of charging. Net worth and assets is another way of charging. It sounds to me like a fairer way of charging as an advisor because as a financial advisor, they talk about holistic planning, advising. Really just means you're encompassing everything. So if I work with somebody, I don't want to work with them and just manage this account or give advice on one account because that may not take into account their income. It may not take into account maybe trust assets they have. It doesn't take into account other investment accounts or a retirement plan they have at work. And really, to do a good job of financial planning and giving advice, an advisor needs to look at a person's entire situation, okay? Things like risk management. Are you married? Do you have a family? Does your family depend on your income? Do you need life insurance? Those are things we give advice on. Don't sell the products, but yet we still give advice on. So net worth and assets is, I would say when it comes down to it, the fees end up being somewhat similar to AUM fees. Because it's obviously based on how much your net worth is, and in your assets or investable assets. So it's a combination of those things, and that's just another way of paying fees. Okay, now down to the bottom one, flat fee. All right, and this is the one that I'm a fan of. This is, and the reason being is because I think this is the fairest way of charging fees. All right, now I'm going to use an example. I work with federal employees. Majority of my clients are federal employees. Federal employees, when they retire, they have thrift savings plan, and in your thrift savings plan, you may have a significant amount of money. It may be $1 million. It could be 300, but it could be $2 million. Okay, so you've got a significant amount of money there, and federal employees have been told for years that the TSP is great. The TSP is the cheapest thing around. You need to leave your money in TSP. So now, a debate on whether or not it's best to take money out of TSP, that's a discussion for another day. But in reality, it's not the cheapest thing around anymore. 10 years ago, it might have been, but now that's not the case. So if you work for if an advisor is working for a flat fee, then that advisor is paid that fee regardless of where your assets are at. Okay? So if I'm to tell a federal employee, move money out of your TSP to this IRA, it's because that is what's best. In my opinion, that is what's best for that client. Okay? I don't get paid $1 different either way, whether the money's in TSP, IRA, joint account, bank account, wherever it's at. Okay? So that is a big reason for the flat fees. It's removing more conflicts of interest. Okay. Now you may ask, what is the flat fee? That's tough because all advisors are different. I know of one advisor. He charges, I think, one fee for single people. He charges another fee for married couples, and it's something like $8,000 for single, or $8,500 and $9,600 for married couples. I know one advisor that charges around $5,000 for everybody. I know of other advisors that they will charge, they will have a range of say $5,000 to $10,000 based on what they charge. And that's going to depend on how much time they spend working with that client typically. I know of another advisor that she may charge fees anywhere from $10,000 to $20,000. So there is some variance in what that flat fee is, but some general characteristics of the flat fee and how that works. The flat fee, again, you're removing a lot of conflicts of interest, okay? And then two, generally speaking, with the flat fee, it's not directly correlated with your asset size, okay? So if you have $1 million versus $3 million, that doesn't mean you're going to pay 3 times more. And from what I have seen, the advisors that I know that work with people using a flat fee, they are typically paying a fee that is lower than what they would be paying an advisor an AUM fee. And sometimes, in fact, a lot of times from what I've seen, it's significantly lower. And again, that's because those advisors probably have the same belief that I do, that just because your asset size is 2 million versus 1 million does not mean that it takes twice the time to work with that client. Therefore, they don't feel like they need to charge twice the fee. Okay? So I think that covers most of what I want to talk about here. I'm going to include a link to a video that I talking about the ways that different advisors charge, commissions, fees. That'd be good to review in regard to this video. And I did this, also saw an article here recently that talked about flat fees. That's what made me think of this. Want to do that today. But again, project basis, it's just a one-time fee. You're paying somebody, they're going to give you advice, a plan, whatever it may be. You're going to go and implement the actions on your own. These 3 ways of charging, that's typically an advisor that you're going to work with ongoing. All right. AUM directly correlate with your asset size. Fees can be anywhere from 2%. Typically 2% down to 1% is when you get higher asset values. Fees can go down below 1%. Net worth and assets. So that's a little different way of charging. It's correlated obviously with asset size. Then flat fee is going to be one stated fee. Now, one thing I left out is flat fees. Do the flat fees go up? So let's say I'm charging somebody a flat fee and their assets, they're continuing to invest, their assets continue to increase. Is their fee going to go up? Well, with most advisors I know that charge the flat fee, no. Will it ever go up? Yes, I would say probably so. So most advisors that charge the flat fee, they will periodically, and I don't know anybody that does it every year. There's probably somebody out there, but they will typically increase their fee periodically for inflation. For example, we had inflation's currently at 7.5% or 8%, something like that. So at some point, flat fees will go up, but if your assets grow by 20%, your fee doesn't grow by 20%. Okay? That's all I have on fees. Appreciate your feedback. Let me know what you think. Thanks.